I think it's pretty obvious that this is going to continue on Saturday, and I guess we might get some clear indication today at the sort of big OPEC Plus meeting before the V8 on Saturday. But it seems like another 400 or 11,000 barrels is coming to the market. I'm probably a bit more cautious, saying that the market is balanced. It might be balanced today, but if we look 3, 4, 5 months ahead, I think they are playing a bit with fire now if they want to keep a stable oil price. It seems like we are heading for an oversupply later in the year.
Can the market really absorb another 411,000 barrels if OPEC does indeed go ahead with this new output increase? We're already seeing prices stuck at around $65 a barrel. That's below break-even for big states like Saudi Arabia and also below break-even for some parts of US shale.
Yeah, sure, but I think that's part of the sort of already stabilizing the market, that especially this is biting into the US production. It's probably not going to grow much with WTI close to 60, so I guess that is stabilizing the market. And then, of course, we have all the talk about sanctions in the market. You mentioned in your own program the Venezuela. That's, of course, part of the sanctions. Iran is, of course, the big elephant in the room here, and it seems like almost by the day there's one day it's going to be maximum pressure, next day there's a big deal coming. I don't know where that is ending, but I think in the sort of behind closed door, there's probably some understanding among the rest of especially the V8, that the sanctions on Iran that are probably going to continue in some way are giving some leeway for OPEC Plus to add more, or for the V8 to add more oil back to the market. And then, of course, we have Russia in the background. A lot of talk about could the U.S. lift sanctions. The last couple of days has moved a bit in the other direction. Could Trump sort of put more sanctions on Russia? But maybe Russia is not that important because Russia is basically capped by the OPEC Plus membership, and I don't see them breaking that. But of course, one of the big sort of uncertainties is, of course, how the global economy will fare over the summer, going into the autumn, going back to the start of April, the Liberation Day with Trump in the Rose Garden. Of course, a lot of concern that this will end in a U.S. recession. It seems like probably going to be a more smooth sailing now, probably avoid a U.S. recession. China might start to pick up a bit again. We're heading for the summer, more crude oil burn, product burn, fuel oil burn in the Middle East due to air conditioning and so on. So a bit more balanced market. So I think in the short term, the market will probably absorb this, and I think it's already priced in that there will be another 400,000 barrels of oil coming July 1st. We also see it in the curve. It is probably what you call backwardated in the very front end of the curve. It is normally a sign that sort of the spot market is supported. There is actually less inventories out there than people may think.
So, Arne, is this also about firming up discipline within OPEC Plus when you take a step back here and look at the broader strategy?
Yeah. I think there's basically a few strategies you can point to. One is, of course, internal compliance, and of course, everyone points their fingers at Kazakhstan and Iraq. So that's an internal market share war, so to speak. But I can't help thinking this is also about maybe let's take advantage of an uncertain investment climate in the U.S., high prices for steel imports for U.S. producers, interest rates staying at 5%. So maybe we can also take some market share from the U.S. So that's sort of the price war or market share strategy direction here. And then finally, of course, also everyone wants to be on a good footing with Trump. I guess that is no secret. And we all know that Trump has been sort of talking about that he would favor oil at 50. He may not get 50, but at least he gets this mid-low 60s. So I think it's like three things in one go: internal market share war with the quota cheaters, some market share war with the U.S., and then also being on a good footing with the U.S. And Trump. Of course, this comes 1 week after Trump toured the Middle East.